So the changes to nuclear liability legislation in Canada has been a very long project. I'm celebrating 20 years in the pool this year, and this file was active on my desk when I got there. So it's been a very long time coming. We've developed many initiatives to increase the awareness of not only the nuclear pool in Canada, but also the changes that were going to be coming to the Nuclear Liability Act. The Act modernized the Canadian nuclear liability policy framework and in the process addressed a number of issues. This morning I'd like to share with you some of the changes that were made and how the Canadian pool developed solutions to these important challenges. So most notably, the increase in the limit of liability from $75 million to $1 billion limit is very, very significant. We solicited the Canadian property casualty insurance market and obtained several new members to the pool. Additionally, many of our current members increased their participation. We raised approximately $400 million worth of capacity in Canada. We believe also that Canada is the first jurisdiction to insure to the much higher limits and for the broader heads of damages. Canada has always used nuclear risk insurers, the UK pool, as a partner, and NRI, between NIAC and NRI, we can provide 100% of the capacity that's required. Additionally, and most importantly, the capacity from the Canadian pool and the British pool, nuclear risk insurers, is licensed and regulated by the Canadian Financial Regulator, OSFI, or the Office of the Superintendent of Financial Institutions. Financial regulation in Canada is among the top tier financial regulation in the world. So that's an important consideration. The broader heads of damages. We had many discussions with the Canadian government regarding the new regime and what it would look like and their desire to incorporate the principles and the scope of damages under the revised Paris Convention. Several years ago, we did a thorough analysis of the property casualty general liability policy and the changes of cover since the mid-1970s. We had many discussions and presentations with our members, and we gave them the confidence that the heads of damages that were being outlined in the conventions were not out of sync with what they were already insuring on their current book of business. There are, however, certain scopes and heads of damages that insurers are not prepared to be exposed to. Under the Nuclear Liability Act, the defense costs or claims costs have been included in the limit and covered by the insurer. Claims costs are generally borne by the insurer as part of the risk transfer proposition. Insurers commit a finite amount of capacity to the pool, however, and therefore having an unquantifiable exposure with respect to claims costs was not something that the insurers were able to get their heads around. So under the Nuclear Liability and Compensation Act, the issue of costs was a topic of a lot of discussion. The new act specifically states that the operator is responsible for these costs. And claims costs are obviously an exposure that insurers understand. It was the fact that if it was completely unquantifiable was what insurers couldn't deal with. So, but after a lot of consultation, a lot of consideration, we were able to develop a product offering that not only the limit of the operators under the Act, we provided that coverage, the indemnity coverage, but also provided a limit for claims cost coverage as well. And that's all included in the same premium. So we believe that this offering provides a risk transfer solution to the operator and protects their balance sheet for what could be very expensive additional costs of settling claims, while at the same time addressing these aforementioned exposures of the insurers. Competition under the Nuclear Liability and Compensation Act. The limit under the NLA of $75 million, although it was quite a significant number in 1976, for insurers to pull together. In today's terms, it's not enough of an opportunity to attract much attention. However, a $1 billion limit, coupled with a very soft market in the property insurance, property casualty market, and extremely low interest rates for a prolonged period of time, create an environment where these higher limits are being seen as an opportunity. Competition is a fact of life in 2017, and NIAC has a product offering, a depth of knowledge, and the technical engineering expertise to offer to our valued clients, which we believe is unparalleled. All insurers who wish to provide the coverage under the Act must be approved by the Minister of Natural Resources, and also the policy form, which is approved, was developed by NIAC for the industry. So both NIAC and NRI are approved insurers, and our capacity is 100% Canadian licensed capacity, as I mentioned already.